In today's video, I'm going to cover 5 stock investing skills that everybody needs to know. So if you're new to stock investing and you're looking for a bit of technical advice, I think this is one you're going to enjoy. If we're meeting for the first time, my name is Matthew, and on my channel I like to talk about growing your career, your income, your investments, and improving your personal finances. So if that's something you'd like to do, then please subscribe to the channel. Be sure to check out the description box below for more links to interesting content that I think you might enjoy. Without any further ado, let's get into today's video. The first absolute must from a basic technical skills perspective for stock market investing is a term referred to as dollar cost averaging, okay? Where there is an element of volatility and you're not quite sure what's going to happen with the stock. You have a target price in mind and you're trying to just make sure that you get in at a pretty reasonable price. So to illustrate dollar cost averaging, I'll just quickly show you an example here on the screen. So you need basically 2 equal payments that you have in mind. So if, for example, your total investment that you wanted to put into the stock is $5,000, then you would buy at 2 points in time. So today and then a future point in time. And the future point in time, the stock has either gone down or gone up. So we'll just illustrate with an easy example here. So the price today in scenario 1 is $2, and obviously the price today in scenario 2 will have to be the same, so it's also $2. In the event that the price were to go up by 20 cents, if we spent an equal installment on both purchases today and tomorrow, then our effective price would be $2.10. In the second scenario, if the price dropped, our effective price would be $1.90. So we're able to hedge the movement in the stock, either up or down, but we guarantee our bandwidth of about 10 cents here by using dollar cost averaging. So just when there's levels of uncertainty in terms of what's going to happen to the prices, dollar cost averaging is an effective way to try and control your overall effective price that you've paid per share. Will I ever mention that you need to be careful of broker fees? So if you're using an app, for example, like ComSec, you pay $29 per trade, depending on which app you use. Okay, so, but for the full version app, you're going to pay $29 per purchase. So if we were to buy, and I'll use an analogy here just to illustrate the point. So if you've got a $20 share, like WPL, for example, or some of the banks on the ASX, you're going to pay, if you're going to spend $1,000, you're going to get 50 shares, okay, on a $20 share. If you have a $2 share, which is sort of a lot of your smaller companies, you're going to get 500. So what you need to do to understand what your broker fee is per share is you need to divide the $29 into the number of shares that you've bought. And you can see the higher the cost per share, the higher your broker fee is going to be per share. So in this example where you're buying a $20 share and you're only spending $1,000, you can see that you're actually paying 58 cents per share in broker fees. And in the second analogy, because it's a much cheaper share from a nominal value perspective, you're paying 6 cents per share. So in both scenarios, if your target price is X, you need to subtract the broker fee per share that you're expecting to pay to reach your target price. So if you wanted to pay $20 for the share, the price would need to be $19.42 for you to spend net of $20. Some ways to overcome this would be to obviously spend more than $1,000. So if you spend $2,000, obviously this cost per share would be reduced by half in both scenarios. So you'd pay 29 cents for the $20 share and you'd pay 3 cents for the $2 share. But the only reason I'm raising this is just to illustrate that it's something you need to be aware of when making your buy decisions. You need to factor in the cost of your broker fees. The other reason why I mention this as well is that it is one of the very few downsides to dollar cost averaging is you're going to spend broker fees because you're buying the same share multiple times. All right, so the second stock market investing skill that I think you need to have is know how to use your watch list. Now, most of the apps that you use for trading give you access to a watch list. And once a stock pops onto your watch list, it's amazing the amount of information that is at your fingertips. You can look at trends, you can look at financial statements, you can look at histories, patterns, PE ratios, dividend yields. And the other thing that I really like is that breaking news that comes from the securities exchange, so whether you're on the ASX or any other securities exchange, any news relating to that stock, changes in directors interests, declarations of dividends, big impairments on the balance sheet, whatever newsworthy events that happen pertaining to this company will pop up on the app if it is on your watch list. So you don't even have to be a holder of a certain security to have a very good understanding of what's actually happening and what is newsworthy within the organization. So know and use your watch list effectively is my second tip. The third technical skill that I recommend you need to know how to do is to close and open positions. And the purpose of this is to try and compound your returns. So if you find yourself up on a stock and you want to close your position or sell, my advice here is to always reinvest your initial capital plus your return in something else, because then you start to compound your returns. If you'd like more detail on this particular point, check out this video somewhere above my head. It's basically my investment story of how I achieved 100% return on my portfolio in less than a year using this exact strategy. So if you'd like to understand a little bit more about how that went, then please check out the video that flashed above my head. I'll also leave a link in the description box below if you'd like to have a look at that. The fourth tip I have for you today is to be consistent in your sources of information and your decision-making criteria. This is very, very important because there is so much conflicting information around what stocks to sell, what stocks to buy, what's good value, what's going to happen. Everybody's always trying to predict the future. I would always recommend here that if you're going to go with a certain process, stick with that process right through. Don't change midway because you're going to create a lot of noise. I advise steering clear of Facebook groups. I advise steering clear of internet-based newsletters like The Motley Fool, who will tell you one day that this stock is a buy and literally 2 days later that same stock is a sell. Avoid the noise. Use fundamental, solid grounds for the decisions that you make, and I think you will just hold yourself in a much better stead to have a far less stressful and emotional ride in your stock market investment journey. And the final tip in today's relatively quick fire video is to reinvest your dividends. Okay, so if you do buy dividend stocks, when you get your dividends paid out, you can actually opt in at the time that you purchase the stock to automatically have your dividends reinvested. And I strongly suggest, not invest, but you can see what's on my mind. I strongly suggest that you do this because if you're holding a security, let's say we'll keep the numbers easy. You've got $1,000 worth of a stock and they have a 5% dividend yield, okay? You're gonna get $50, or if the stock is, let's say, $5 a share, you're going to get 10 free shares in dividends if you have an automatic reinvestment. And what's going to happen is the next time they pay out, you're going to get dividends on those 10 shares. And it's going to compound over time. You're going to start getting returns on returns. So similarly in the earlier example where I said when you close a position, open a new one both with your principal and your capital gain, the same principle applies here where you get your dividend and you automatically buy more shares so that you start to compound your return. So if you have an automatic dividend reinvestment and you are reinvesting your capital gains every time, you're really taking maximum advantage of the compound theory or the compound power of interest and buying and selling your returns. So in summary today, the critical technical skills you need to have on board when getting into investing and to understand is you need to understand dollar cost averaging. Make sure you're aware of your broker fees and you're factoring that in. Make sure you're using your watch list effectively, that when you close a position, you open a new one with both your initial capital and your capital gain, you reinvest your dividends, and you make sure that the sources of information that you're using for your investments are consistent all the way through, and you block out your noise. If you follow this method, I can assure you that the likelihood of you having a successful and enjoyable stock market investing journey will exponentially increase. So if you enjoyed today's video, leave a like, subscribe. Please, as I mentioned earlier, check out the description box below for more videos that you might enjoy. Thanks for watching, stay safe, and I'll see you soon.